Welcome back to the Real Estate Money School. I'm your host, Chris Noggle, and thanks for joining us today. I'm here with Devin Elder, and we're going to talk about some really cool stuff. We're going to talk about how Devin has grown to a 600 plus unit multifamily just empire. And the real question comes down, when I see somebody that's got that big of a portfolio, it always comes down to, how did you get there? That's what we're going to talk about in just a moment. So we're going to hear Devin's entire story, his journey to success, and then we're going to talk a little bit about Devin and where he's going in the future, because I think these are trying times. Devin, would you agree that this is kind of a weird dynamic that we're in here?
It's definitely weird. Yeah, I think, like in any situation like this, there's a lot of fear and there's a lot of opportunity, but it's certainly a weird year.
Yeah, so we're gonna talk about maybe your view on kind of what is to come. But before we get into that real quick, I want to talk about the audience and what all of you are doing. So you are all on your journey to becoming a rebel banker. In that journey, it comes with some knowledge. It comes, watching YouTube videos and reading some books and podcasts like this. But the biggest problem with that is knowledge, as they say, is power, but it's really not. Application of knowledge is the real power. So what you're doing when you're absorbing this and what you learn from today's podcast, I urge you to take action on one or two of the golden nuggets that you're going to get today. And I'm going to challenge you on another thing. Okay. So this is how I always do it. I always like to see how many of you will actually take action. So I like to offer you something for free, but you have to invest your time to get it. So what I'm going to offer you all is a copy of one of my two books. You can have the Private Money Guide or Mapping Out the Millionaire Mystery for free. You just pay the shipping, but the book is free to you. The question is how many of you will take action on a free offer like that? Well, I'm going to put it in the show notes. If you guys want either of my books, there's a link up there. You can click the link and you can get the book for free. But again, if you want success, gathering knowledge isn't going to get you there. It's the application of knowledge. Devin didn't get where he's at by doing just, gathering up knowledge. He did it because he took action on that. So let's dive right into it. Let's tell everybody a little bit about your story. Like, what do you do today?
Today, I run DJE Texas Management Group. It's you just call it a private equity company, but we're really a vertically integrated multifamily investment company in San Antonio. So I started this company in 2012 with a little single family house. We've gone on to do, I'm a principal now on over 2,000 doors of multifamily. A little over 1,000 of those are ours that we're running, and we've gone full cycle on a bunch of them. And so my day-to-day consists of overseeing our team that buys and manages these typically, 200 plus range apartment complexes in San Antonio.
That's fantastic. And the first thing that comes to my mind is, you said 2012 is when you started this, right? Mm-hmm. That was a short 8 years ago that you started this, right after the Great Depression, or Great Recession. It almost felt the same. Right after the Great Recession, you started this. It was 8 years ago, and look at where you're at now. And that brings a couple questions to me. Is to get that many units and get that kind of scale, you did some things right. Or maybe you did some things wrong and learned from them to get where you're at. So what I'd love to do for the audience is really kind of go back to 2012. Talk about what was life like before 2012? What changed to get you kind of into that first rental? Like, what were you thinking? And then how did you make it to over, the thousands of doors that you have now? How did you do that?
Yeah, so I was working in a corporate job, and in 2008, I had a retirement account, and I saw it get cut in half, and it started to kind of shake my confidence in the plan I had, which was go to college, get a corporate job, climb the ladder. And that was kind of it. Like, that's as far as I'd planned. But I thought, hey, if I work for one of these big companies, it's going to end up okay. However, 2008 shook my confidence in that plan, and I decided that through really being inspired by my older brother, who's always been an entrepreneur, not real estate, and reading some books like Tim Ferriss' 4-Hour Workweek and Robert Kiyosaki's Rich Dad, Poor Dad, I decided I want to be an entrepreneur. I just didn't know what avenue I was going to take. And I explored kind of took a cursory look into some different things. How can I get out of this corporate job? And I felt like I was getting promoted, and each time I got more money and less time, it was a little bit more of a trap. And I knew that if I got too many more pay raises, I was going to be hooked for life, right? Because then you get that pay raise in your job and you start living the lifestyle and you go, man, there's no way I'm going to replace this income Because being an entrepreneur is jumping out into the wild and fighting for your life with a knife. I mean, that's
I agree. In the beginning of an entrepreneur's life, this is kind of what it sounds like.
100% for years, So anyway, was doing the corporate thing. I got shaken up a little bit by 2008, decided I want to be an entrepreneur. And in 2012, I went to a real estate seminar. And I saw them walk through how to do a BRRRR method on a house, buy it with hard money and fix it up, refinance out your money. And I was sold. It was a weekend seminar, kind of a classic deal. I put my money down. I said, this is how I'm going to become financially independent, right? First house was $10,000 rehab. I was terrified, right? I'm going to put $10,000, which was really the lender's money, the hard money lender's money, but and the house is beat up. I bought it for $38,000. In retrospect, I should have bought 100 of those deals, but the first one was terrifying, right? But I got through it, and then I said, hey, okay, this is how I'm going to build financial freedom. And then I started doing the BRRRR method. I started buying another house. Actually, that first year, I just bought the one house because I was working, married, I had young children, lots of irons in the fire, but I knew for sure that I was going to be a real estate entrepreneur, and this is how I was going to get out of the rat race and set up my family for, what's hopefully generations to come. Right. But at the time it was like, all right, well, I've got to replace a 6-figure income and this and that. So I had about a 3-year period of absolutely burning the candle at both ends, where I would go to, I'd meet the escrow officer at a Starbucks at lunch and sign closing docs for another hard money loan. I'd go see the property after work. I'd meet the contractor there. And I got up to about 10 of these rental houses. And I said, okay, I'm getting some cash flow here. I've got some meaningful equity, because I didn't start with any money, right? I think people should understand that. I think I had $20,000 that I scraped together through selling some stuff. That was my starting point, right?
That's a really, really important thing, folks. He started with $20,000. Like, how many of you are in that situation where you're thinking, oh, I don't have enough money to get into real estate? This is where this podcast is so valuable, because it brings rock stars like Devin in and shows you, like, he started the same place all of you did. He read Rich Dad, Poor Dad. That book has launched so many real estate investors. He went to a 3-day training, which, a lot of people say, oh, those are just a waste of time. They're not. That's how I got where I'm at. That's where Devin got where he's at. 20,000. Sorry, I didn't need to stop you, but that's such an important thing for everybody to understand.
Yeah, it is. It is, because I think without that context, listen, I could be a 3rd-generation oil guy and I need to deploy $10 million of my family's money. That'd be a different scenario, right? And without that context, I think, people don't understand that journey as much. So I was, I think it's important to relay that I was committed from day one. And when I mean committed, I meant cash out 401k, sold my car, sold everything in sight to scrape together capital, and then eventually in 2015 left a really, really comfortable corporate job for massive uncertainty. And so all that started with the absolute definite decision that I was gonna do this, right? Make it work. And that's really important, because it's like a marriage, right? I mean, if it's kind of dating, it's kind of like you can walk out anytime. A marriage where you say, I'm committed for the rest of my life to this, it sure takes a lot of little questions off the table that you don't even think about. And so I had, probably thousands of trials through this period where I would just say, well, I'm committed to this. And I just got kicked in the teeth on this or this. Entrepreneurs face a lot of struggles. And I just adopted this mindset from the very beginning that, well, I committed to this for the rest of my life, or until I'm, done with it and completely retired and don't want to do it anymore, but I'm committed to making this work. So I started doing the rental houses, and my goal was, it was kind of this, this Rich Dad, Poor Dad, and many others, right? It's not like they invented this idea, but having cash flow to cover your bills every month. To me, that was this definition of financial independence that I clung to. And so I did that through a series of single family rentals and a small multifamily. And then I started flipping houses, and then that's where some bigger chunks of capital started to come in. Fortunately, through this group that I had started way back in 2012, I got to be friends with some very experienced multifamily operators. And these were wealthy guys that had successful corporate careers and were buying 200 and 300 unit apartment complexes like we do now. And I thought, there's no way in the world, I can't, I am so far out of league with these guys, but I got to be buddies with them. And that was worth 100 times the cost of the admission to get into this group. Right. And, I've got my complaints about that group, and I won't name them, and they weren't perfect, but boy, it got me, to be buddies with these big operators. And that was so vital, I think, for any of us. If you're going somewhere, you got to have somebody that's already there that you are like face-to-face friends with. And that does something, I think, in our brains that was powerful. So I said, listen, I'm going to be like these guys. I'm going to own 1,000 doors someday. I have no idea how on earth I'm going to make it happen, but that's the intention, and I'm going to work towards it. And it takes me years. This is a big goal. It's going to take years, right? College degree takes 4 years, 6 years with the master, and the ROI is kind of crummy in a lot of cases, right? This was like I'm willing to put in 4, 6 years, 10 years, I don't care, 20 years. I'm committed, and this is going to happen. And so in retrospect, it actually seemed very, very quick. At the time, it didn't. But there was a big day in 2015 when I had passive income to cover my bills. Not a whole lot more, not a huge savings, but some. But I'd proven that I could go flip some houses. I could borrow some private money. I could kind of do this. I'd done some flips. I'd made little chunks of money, $20,000, $30,000 here, which, hey, you string a few of those together and you're replacing a 6-figure income. Wasn't what I wanted to do forever. I always thought of flipping houses kind of like bartending. Like it's easy money. It's good. Or maybe being in the NFL, this is good money, but you can't do it forever. So, but it got me to that next tier, which was passive income to cover my bills. And that's when things really, really, really took off. And I hoped and suspected that they would. But when I was relieved of that 40, 50-hour week job, and granted, listen, I'm married, I got 3 kids, I got a lot of other stuff going on, and building the real estate stuff. I mean, it was absolute chaos and burning the candle at both ends for years. Right. And I don't want to sugarcoat that for people, but it was only like 3 years. And now, this is a completely different life that I would have never dreamed for our family. Right. So once I reclaimed all my time to focus on the real estate stuff, that's when the kind of hockey stick growth in the multifamily started to take off, which had been years in the planning and preparation. But now I had some capital. I had a track record of kind of these single family projects that I'd done. I'd seen some ups and downs. I'd taken a few losses on a few flips where I lost some money and got, I'd been stolen from. I'd had contractors issues. I mean, just kind of everything you could have, tenant issues.
You too?
Hey, believe it or not every contractor I've hired has worked out. We had a lady, selling heroin out of one of my multifamily units that I was managing. It's like every story that you can imagine, I'd had it. So I'm like, listen, I've taken a few punches. I've raised some capital. I've always beat or delivered for my investors. That was a big one, right? Learning to deal with other people's capital. And so in 2015, I said, listen, I've at this point, I've raised millions of dollars in private money for these houses. And these are just guys I'd met networking that said, I'll give you $150K in a first lien position for 11%. And now, that was a huge aha for me to go, well, man, somebody told me a long time ago, it's not, people get hung up on the cost of capital, 11%, that's loan shark rates, right? But it's not the cost of capital, it's the access to capital. Because if you don't have access to capital, you're not doing anything. So I was more than happy to pay a high cost of capital for speed and execution. And then these deals had enough meat that everybody could win. And that's another concept here that was really important to me from the beginning, is that if you set up win-win scenarios for you and the investor and the team, you can do that forever. And I'd seen some stuff in the corporate world that just made me feel kind of gross. It's like, I just seen how some companies were run, and I just felt like it was not a win-win for the parties. I thought I saw through real estate that it could be a win-win for the investors, for me, and for our end user, whether that's a buyer or a resident, right? So you create a win-win scenario, everybody wants to go do more of it, and that's been the case. So having my free time out of the corporate job in 2015, I started focusing on multifamily, and it was a big pivot for me to say, all right, now I'm going to go try and raise a couple $1 million for one project. And it was absolutely terrifying. And I think it should be terrifying for anybody that's going into that business. But I justified it to myself by saying, I've already raised millions of dollars. It's just been across many projects. I've always made good on my promises. I did this thing. I don't do a lot of private money borrowing now, but when I did, I would meet somebody new and I would pay them their interest payment a week early and not say anything. But, if it's due on the 10th, I'd pay it on the 3rd. And it's just little stuff like that that creates a lot of trust for people to go, well, I've got $150K parked with this guy. I hope he can pull it off. If he can't, I could foreclose on the house, get my money back. But something like paying an interest a week early, there's really no skin off my nose to do it. It just kind of created that trust and credibility to go do more deals. So that was the genesis of getting into multifamily. And then once I started learning how to syndicate and raise capital, it was just a matter of just growing that, and growing our investor network. Multifamily, the mechanics of it are pretty straightforward. I mean, you're dealing with big numbers. We're working on our last deal for 2020. It's a $23 million deal. It's a big asset, big numbers, but fundamentally we got rental income, we got expenses, and we got some leftover to send investors. And I mean, that's, there's more nuance to it than that, but it's a simple business model. I'm not operating on people's brains or anything. So we're at the point now where we've got a team and we can just kind of rinse and repeat. And my challenge today is, hey, Devin, don't do that project. Somebody sent me a church yesterday for sale and I thought, man, we could buy that and we could turn it into this thing. And it was super exciting. And it's like, dude, just go buy another apartment and rinse and repeat. If you're trying to make money and make money for investors, we already have that formula. Just go do it again. It's kind of boring, but staying focused on that replication, I know is going to continue to make it a success for everybody involved. And it's hard not to stray for these other projects. But that was the game plan all along, was to get to this point where we had kind of a rinse and repeat formula on these multifamily deals, and that's what we're doing today.
And I think that's great. There's so much to unpack there, folks. So, that's why we do that, where we take you on that journey to successful investors' lives, because everybody thinks that they're born in that, that silver spoon world where they come from an oil sheik or something, and that's how they got into real estate. Absolutely not. We've all gone through the trials and tribulations. We've had those failures, those flips that have lost money, those contractors, those pesky contractors that have stolen money from us, and everything in between. We've all dealt with it, folks. It's just how you get there. But I want to unpack some things that were so critical, and I feel like, Devin, the audience needs to understand these things. You focused on other people's capital. What that means is Devin was borrowing money from other investors, private investors, hard money investors, and he would then pay them a week early. Like for some of you, you're like, yeah, that's so easy. And it really is. In today's world, you set up a bill pay and you move it a week earlier than what the due date is. But the impact that has on the investor's psychology and trust level is something you can't buy. For you, it's just change the date. If it's due on the 10th, pay them on the 5th. Just set the date in the bill pay, folks. That is so important. Being on the money side of things, being the lender and also the borrower and teaching people how money really works, that is a critical mistake so many people make. They'll set it up or they'll pay them a couple of days late every time just because, hey, I don't know, sometimes people are just used to paying people late. Be a good steward of other people's money. You see, when you're dealing with other people's money, it's not just about the return you pay them. It's about the return of the capital that you're going to pay them back someday. And they want to know that they're going to get both, which comes down to trust. And that right there, that simple little tip is a great way to build trust. Network. Early on, he paid to be part of some group, to swim and to be around these other investors. I call it being around the campfire, but really some people just say your network is your net worth. He wouldn't be where he's at if he hadn't been around those people that he was able to mimic what they did and basically think like them. So much of the mistake we make in life, whether it's money or success, comes down to just your mindset. You can't get in the right headspace and the right mindset if you're not around people in that mindset. You can't invent something in your brain that you have never seen. That's critical. I thought that was important. Cost of capital. So many people look at these hard money loans or these private lenders at 12% or 15% with points, and they're like, oh my God, that's too expensive. You know what's too expensive, folks? Not doing the deal, not getting in the game. That's too expensive. When you run your numbers, you build the cost of capital into your deal. If it works, great, you do the deal. If it doesn't, and it doesn't work with that, you bought the deal for too much money, or you're looking to buy the deal for too much money. Cost of capital is nothing. It's the access to capital, as Devin said. And I always say, cost is only an issue in the absence of value. what is the value? The cost, it's just part of it, folks. Don't get hung up on that. And I love the everyone wins. Create win-win scenarios for you and the investors, or you and your partners. Don't ever make this a one-sided game. Zig Ziglar says it best. If you help enough people get what they want, you'll get what you want. You can't do that if you're playing a one-sided game, folks. Win-win for both parties. And actually, I would even say, make sure that the others win first. You will always win second. It's a universal law. So I thought that was really important to unpack. And then here we are now, the big pivot. He had to make a big pivot when he went from single family rentals, BRRRRs, okay, and for those of you that don't understand BRRRR, it's buy, rehab, rent, refinance, and repeat. And I always say right now, because that's a great model. We've used it tons. But when he went from that model to a multifamily, where we went from doing hundreds of thousands, or $100,000 deal to doing a $10 million deal, that's a psychological thing, but it's the same game. It's the same mechanics. It's just different numbers. Add a 0, add 2, add 5. Doesn't make a difference. So when you play in those, don't get hung up on the numbers. Just focus on staying in your lane and doing what you're good at and what you've learned. But Devin, what I want to do now is, and you said it, and I just wanted to unpack that was such great stuff. And I think everybody watching this, folks, if you didn't literally write down a bunch of those golden nuggets, you're not applying knowledge. You're not doing what I told you have to do. But the big thing I want to talk about is we are in what I call the big pivot. COVID, this crazy election going on, this just unbelievable, unprecedented time. What is the future? Where do we go from here? I think a lot of people are asking that. And a lot of people have put all their dreams on hold because of this unknown, which I think is a mistake. But let's talk about the big pivot. What do you see coming? How are you reacting to this? What are you doing different? Or are you just charging ahead hey, this is just a minor blip in the radar?
Yeah. So in March, when all this hit, we definitely paused everything, right? Listen, we're going to pause any sort of acquisition activity. I had to let somebody on our team go. I let a few of our vendors go. And I just said, if I had to cut every penny of cost, how could I do it? So I made some tough decisions that were absolutely the right decisions I was pushed to make. I started a property management company, which has been an absolute game changer in the best way. And I wouldn't have done it without being pushed. So sadly, I tell people, life will show you the next business move. Sadly, often that's through great pain is how you are shown. So I kind of begrudgingly accept that reality and say, I'm experiencing great pain or fear of great pain. I'm being told to do something different. So I had to do a lot of things different. Started the management company, let somebody go, let some vendors go as a circus. But another thing we did on the investor side, which was kind of cool, was tighten up our communications. And we started moving into daily communications on assets. Rather than a monthly update, we said, hey, we got some capability to just have almost real-time asset performance. Here's our collections. Here's what's happening. Because we didn't know what was going to happen in March. We didn't know if occupancy was going to go to 50%. You just didn't know. So we said, pause distributions, ramp up our communications to an insane level. And people really, really appreciated that. And then now, here we are kind of later in the year. We've resumed distributions. Frankly, multifamily's fared very, very well so far. We're extremely grateful for that. We don't know if the other shoe's going to drop. I don't know what the future holds, but collections and occupancy and traffic and leasing, all that stuff is, I don't want to underplay it, but it's almost like business as usual. So we're very pleased with that. Now moving forward, what we have is a debt environment that is beyond my wildest dreams a year ago, right? So we've got a debt scenario. We're looking at a deal right now with 5 years interest only at a rate in the high 2s, which is it's mind-bogglingly amazing, right? So here's what I kind of see long-term, and my thesis around multifamily is we're printing trillions of dollars, and my job is to lock in the bank at a mortgage of X. Let's lock in a $15 million mortgage at 2020 value. I think we're going to see inflation. I think we're going to see asset prices continue to go up because of this low interest rate environment. It fuels all sort of I could argue that this is not good, but I'm not I'm not making this decision, right? I'm not deciding to print all this money. I didn't decide to take us off the gold standard. I'm just a player in this environment. So my job is to lock up assets in today's dollars that cash flow, because I think we're going to see a lot of asset appreciation. Unfortunately, we're going to see a lot of inflation too, right? So the goal though with our deal is to find projects that cash flow, and we can run some conservative numbers and hit our return projections to investors, from a cash flow perspective and a total return perspective. But really, I want to lock in this debt, lock it in for 10 years. And I think we're going to see asset appreciation because of all this influx of capital globally. And if that happens, we want to be holding debt in 2020 or 2019 or 2018 dollars and ride that into the future. And then we're also looking at things like population growth in the market that we're in, and we're very encouraged by that. So I think, and then listen, from an investor perspective, second half of this year, we've seen a lot of investor interest. We didn't know how investor interest was going to go post-COVID, but we did a deal in September and we're closing a deal in December, both which are seeing very strong investor interest. So I think investors kind of see it too. They want to be in hard assets, real assets that are producing cash flow. And so, the financing component is letting us go out and make deals happen that frankly wouldn't have worked at last year's debt terms, that at today's debt terms make sense. So I'm pretty excited about the financing and locking that in for 10 years or whatever, and then just kind of operating these properties. So that's my thesis moving forward, outside of any sort of, we wrote into a contract some riot and provisions and things like that. That's kind of all new. So outside of some of that stuff happening, I think we're going to be able to get deals done next year because of how cheap debt is.
Yeah, writing in a riot provision in the contracts we never thought we'd see that in our lifetimes. But
that's right.
Insane what the big pivot has brought. But I think there's a lot of good things that were said there, and I think you're absolutely right. I definitely think in this low interest rate market, which the Fed probably is not going to raise rates, it is not conducive to make Wall Street happy. And Wall Street, unfortunately, and the government are way too tied together. And it's not just the U.S., it's worldwide. Markets are global markets now. So you're going to see this low interest rate cycle, at least, I would say, for the next 3 to 5 years. So with a low interest rate cycle, that's going to keep the price of real estate going up. And being an old Wall Street guy, I can certainly tell you what's happening on the other side of the coin is there's a ton of fear with the stock market. With this election coming, with some of the different changes that will happen depending on who gets in and who doesn't, there's a ton of fear in Wall Street. Although the markets are going up, don't be tricked by the Wall Street numbers that you're seeing and the indexes. That is literally I call it a magic trick, folks, because what you're seeing is you're seeing a market going up based on things that are not fundamentally true. Some of them are, but the tech world has exploded, driving the markets up and controlling way too much of the indexes. So with that, don't be trapped by what you're seeing in the Wall Street. That's not going to continue. And when that balloon pops, all the big money, institutions, hedge funds, banks, that money's flowing to hard assets. As a matter of fact, folks, what you don't know is it's been happening and you've been seeing it. You hear about iBuyers, right? You hear about all these iBuyers, from the Zillows to the Open Doors. Who do you think those are? A lot of people are like, oh, it's just some guys that were really smart to pull together some money. Absolutely not. Those are hedge funds that are pulling money out of the markets, okay, slowly deflating their investments in the markets, moving it into hard assets. What does that say for you? That says it's time to giddy up and go with some real estate, because a lot of people think that real estate is going to take a big drop, although it will probably take a little contraction, but that contraction will provide you the buying opportunities. And then comes raising money. With what I think is going to happen with the markets going down and the things I'm seeing with what hedge funds are doing, raising capital will never, ever get easier than it's going to be now and in the near future. You will be able to raise millions, tens of millions, hell, billions of dollars of capital for your deals very easily by doing exactly what Devin just talked about. Put your investor first. Show them the security in this. Show them that hard assets trumped these stocks and these make-believe returns that, don't always stay around. Be smart. Go out there, talk about money, talk about the benefits that real estate has, and you will find that you will become a magnet for money. This is what I teach, folks, and you guys know this, and you're hearing Devin talk about this now where, as this goes on, Be a good steward of other people's money. And I didn't mean to unpack that too long, but this is such critical stuff. So Devin, as we kind of get to the end, wrapping, what would you say have been during this entire process from 2012 till now, what was your biggest external obstacle that you had to face? Because you went through a lot, 3 kids, married. I'm not going to say anything, but like, what was your biggest external obstacle?
Capital initially, I mean, it's, there was a lot of internal obstacles, so we'll leave that alone.
We'll talk about that next.
External was, I would say knowledge, network, and capital, right? Because if you have knowledge, network, and capital, these deals it's not rocket science, right? So starting from, zero real estate background, never having raised capital, and having to go through that knowledge, both the book learning and the consuming podcast, and then going out and doing it and having some failures, fortunately on a very small scale in retrospect, right? It was good to have, for me personally, good to have some failures kind of with these little houses, which felt very big at the time, but getting that knowledge, some of it book smarts, a lot of it street smarts, right? And then network, that was, I paid to get into a network, but that's been a constant refining process ever since. And then capital, listen, we can all talk about this stuff, but you need hundreds of thousands or millions of dollars to make this stuff happen. And you've got to create something compelling that somebody can't wait to give you that money. And that just doesn't happen overnight. There's a whole process to that.
All right. And you opened the door for this one. What was your biggest internal obstacle during this?
Definitely growing up in a poverty mentality, and that was this huge thing. We didn't grow up with any money. I didn't have any role models that had money growing up. And so even to just kind of have like a nice car for me was like a huge mental disconnect. And so I kind of went out of my way early on to try and just shatter some of that stuff, right? And go for, nice car, nice neighborhood. And it really was a huge internal struggle. Looking back, that was all internal struggle, but there was a lot of programming I had that for my whole life that a lot of it I did was unconscious. And I just realized I had all these biases and all this negativity around wealth, around wealthy people. And I think that stops a lot of people. They think rich people are bad. And I think that stops them right there. It just stops, because why are you going to try to do all this hard work to be a bad person if you fundamentally believe that money's bad or wealth is bad? And so I had to do a lot of deprogramming. And a lot of that, I think the antidote for that is getting around the right people. I think getting around the right people is the answer for a lot of this stuff. And by the right people, I mean somebody that has the result that you want, whether anything in life, right? In my case, it was finance and multifamily investing. So getting around those people, I just kind of deprogrammed myself. That was the biggest internal hurdle, and I can't play that, because it was a huge. Took years to kind of get through that.
It's so interesting, folks, for those of you listening, and if you know my story, my journey, and everything I've done, you would think that Devin's read my books and watched all my podcasts with what he just said. You see, he grew up with no money like we did. And it's a mindset shift that you have to do. And it's a very difficult one, because conditioning your whole lives, you've been taught money works a certain way. You've been taught a lot of things work a certain way. And then all of a sudden, when you start peeling the onion, you start seeing it doesn't work that way at all. You've only been shown the way to the path that they want you to be on. When you start blazing the path less chosen or less traveled, now all of a sudden you see these things that he just mentioned. All those things, he had to shatter those disbeliefs, those pre-programmed corporate things that were taught from high school, from grade school all the way straight through. And you're going to all have to do the same thing. And I'm going to kind of close in a quote from one of my favorites, Will Rogers. And he says, the biggest problem in America is not what people don't know. The biggest problem in America is what people think they know that just ain't so. Folks, get around the right people. Don't take advice from people that aren't living your perfect day. Take advice from people that are living the perfect day that you want to live, that are doing the things you want to do, and watch how your life transforms. That is the simplest way I can tell you all how to get out of the conditions and the situations you're in today if you don't like them, and how to get the life of abundance that you're dreaming for. Devin, this has been great. Unbelievable golden nuggets here. How would people go about getting a hold of you? Where would they find you? I mean, tell everybody how they can look you up.
Sure. So the easiest way is you could just Google our company. If you put DJE Texas in, you'll find us, find the website, djetexas.com. And there's ways to connect there and other resources. We'd be happy to connect with folks.
Folks, so you all owe it to yourself. Look him up. We'll put the link in the, it's going to be above or below, depending on your advice, in the description so you can check it out. This is what you folks need to do. You need to really get out of your comfort zone and chase the things you want and get around the people that have already done it so you don't make the mistakes that we've both had to make as many times as we've had to make them. And I'm going to go back to what I opened with. Your journey to becoming a rebel banker, folks, involves you getting knowledge and taking action on it. I offered you both 2 books. You want money for your deals? I wrote the book on it, folks, The Private Money Guide. You can have that for free. And if you want to know what wealthy people do with money that is different than what you've been taught, Mapping Out the Millionaire Mystery, you can have both books for free. And if you want them, go to chrisnoggle.com, click on the resources tab, 2 swipes, click free book. That is your challenge, folks. Take action and take action on what you learned from Devin. So folks, thank you for joining us for another episode of the Real Estate Money School. Devin, it was a real honor having you on. Thank you.
Chris, thank you so much. I enjoyed it.
All right, folks, we'll see everybody later.